Charles Schwab Asset Management CEO, Omar Aguilar, and Deutsche Bank Wealth Management for the Americas, Deepak Puri. Guys, good afternoon. Omar, so politics went from dramatic uncertainty and a scary event over the weekend to a VP pick today. Elections can be 100 days out, a cause for volatility in the markets, but we don't see it now. What do you think we get from here in the markets?
Well, elections usually bring that a level of uncertainty, and I think you will see, and we're seeing already, as we get closer to the elections, we're going to see these bouts of volatility depending on how different surveys come out and depending on how the markets, interpret the potential policy implications and what may have an effect on markets down the road. But in general, when you actually look historically, it's really just, reducing the level of uncertainty, like the pick of a VP, that will basically tend to just favor the markets. Historically, over time, it doesn't really matter what is the outcome of the election as long as the election is clear and precise. That usually tends to be a tailwind for the markets.
Now, Deepak, fortunately, former President Trump was not significantly injured in this incident over the weekend, but, scary nonetheless. You look at the market reaction today, you might not know that. Did we learn anything about the expectations that investors have, or just the dynamics in the global markets based on this reaction?
Yeah, it's hard to argue that the markets really, did anything based on the failed assassination attempt. I think the markets really took its cues from the macro developments from last week, whereby we saw, softening of the CPI data, which was really welcomed by the markets, because as we are getting closer to the second half of the year, the soft landing scenario is becoming more and more entrenched into the psyche of the markets. The previous week, we had the non-farm payrolls number where the unemployment rate went up to 4.1. And then we had this nice third linearly, weaker inflation data. So in taking both in combination, it gives a very nice lift-off from the Fed's perspective to start getting, greater confidence and start thinking about rates. And this morning, Chairman Powell sort of alluded to it when he said that the labor market dynamics looks very well balanced going to pre-pandemic, and he feels much more confident with regards to the inflation or the disinflation traction. So I think, globally, hard to argue, but I think really today's market movements, to me, were more a function of the macro developments that we have seen over the last couple of weeks.
Okay, that's the positive side. But Omar, at the same time, you expect the economy to continue slowing down from here, laying the groundwork for that rate cut that Deepak was just talking about. Could it slow down to a degree that's concerning, especially as we get toward the end of the year? We need the consumer to be perhaps strong.
Well, that's precisely the softer part of the whole discussion. I think, overall, the more we continue to be in the situation we are now with interest rate high, and we see that cooling of inflation and that slowdown of the economy, the main concern that it's got to be for central bank at the moment is the fact that, yes, the consumer, especially on the lower end of the income statement, usually tends to get squeezed, and we see significant amount of challenges on that part of the market. Now, in the aggregate, you don't necessarily see the consumption data being totally affected, but the reality is that part of the market, the 40%, bottom part of earners, is starting to actually feel that high level of real rates. What that means, though, is that in general, the economy is slowing down, but the Fed is paying attention to wage growth and paying attention to the level of unemployment. And you think about the dual mandate for the Fed, you're thinking about the fact, and Chairman Powell said this morning, the path to that disinflation, getting to that 2% seems to be on track. Mm-hmm. Now their focus will be on unemployment and the labor market dynamics.